Hello, welcome back everybody. Today's video I'll be covering fair value gaps and ranges in more depth. On the fact of ranges, I will be having a look at the concept of internal versus external range liquidity and how we move from internal to external range liquidity and oftentimes back into internal range liquidity. I'll show you how to frame the correct ranges, and I'll give examples on how this phenomenon works. After that, I'll just be talking a little bit about time and how we should always factor time into our strategies. And I'll be showing you the importance of the New York kill zone and how time factored into some of the big moves that we saw today. I also want to talk about how we can use economic calendar to get a heads up on important news events and how those also factor into volatility, and that we should always consider them when making our trade ideas. Right. Also, I want to remind everyone on the importance of the intermarket relationships, particularly between Bitcoin and the S&P index. So Bitcoin does often fluctuate similar to the movement found in the stock indexes. So I'll show you a little bit of that happening. And at the end, I'll show you a live trade I took using the tick chart on the Atos software by using CVD divergences with open interest data to anticipate reversals in price. Okay. Good. So on the matter of fair value gaps, I want to remind everyone that it is very important to first mark out those fair value gaps found on higher term timeframes. Of particular interest to me are those found on the 1 hour and the 15 minutes. All right, these take precedence over all other fair value gaps found on lower term timeframes. Now, so when we mark out a fair value gap, let's say on the 15 minute, but we have a smaller, say, if we zoom down into a 5-minute chart, we also have a fair value gap, let's say on the 5 minute, that's within the 15-minute fair value gap range. We should always just remember that it is within a bigger fair value gap, okay? And oftentimes the larger fair value gap give us a little bit more room to work with, allows us to set our stop loss a little bit lower, and that's important on an asset like Bitcoin that is quite volatile, and you can have those unpredictable stop runs that sometimes will target what might otherwise be a safe stop. Okay, so I'll just so here you can see two particular examples. So the first one being this 15-minute fair value gap. Okay, so we have this 15-minute fair value gap and we have this one up here. Okay, and both within these fair value gaps, there are smaller ones, but like I said, this is enough for me to set up an idea or a point of interest that I want to see revisited if we do get a retracement. Okay. Okay, so as the new candle day opens here, we have an energetic distribution in price, which creates that porous price action, which gives us the fair value gap on the 15-minute. Then we get a 3-drive pattern here. Now the 3 drives pattern is one of the probably the only pattern that I use that's considered a retail pattern. So it's a good signal that the market is getting exhausted and that the current move is possibly ending and we can see a reversal. So I think about it, the way that I think about it is that on each consecutive move up, we are targeting higher pools of liquidity, and once a significant amount is reached, then we get a move down. And for me, this is a very accurate pattern that is probably the only one of the more traditional patterns that I like to use. Okay. So as price comes up with the energetic distribution, we create the fair value gap on the 15-minute, we create the 3 drives pattern, and we get a retracement down. Here you can see my entry on a short. Okay, so price retraces down, 15-minute fair value gap, and also within the 50%, below the 50% threshold, so below the equilibrium of this range. So we move to internal liquidity of this range, tagging and running the 15-minute fair value gap, which time we move upwards and we run this buy side liquidity, which is now external range liquidity from this range. So this is a classic example of how we create the range, we move to internal range liquidity, marked by the fair value gap, and we move outside, tagging the external range liquidity. Then we create this high. Now this is an important high because it's essentially the high before 8:30. So this is our most recent swing high, therefore it is going to be potentially an area that's going to be targeted for a run on stops as part of the 8:30 news embargo lifting and as part of the New York session opening. So at 8:30 we run buy side liquidity at the top here, and we make our way down, targeting these relatively equal lows here for another run down into this 15-minute fair value gap. And just on 10 o'clock, which is the time on the economic calendar where Fed Chair Powell was talking, we had another injection of volatility and price moves up. Right, so I hope at this point people are starting to understand the value and the utility of these concepts that have been taught. Okay, now you can have a look yourself just how accurate they can be in calling significant moves in price. With that being said, that frames our morning price action. Okay, so you'll see here at 11, that's when our OTE pattern recognition and time period ends, and we wait for the next setup. So I'd like to draw everyone's attention now to the afternoon session, which for me begins at 14:45. Now, because we were above the midnight open at 8:30 and the swing low created in the morning session was not the low of the day, for me this is considered bullish. So I'm looking for higher prices into the afternoon. Before we have a look at the afternoon session, I want to point everyone's attention to this price swing at 1 o'clock. So you might be asking, why did we create a swing low here? It's not filling a fair value gap, and there's not a obvious sign of resistance or support, I should say. But if we go over to the ES chart, S&P 500, and we have a look at what's happening at 1 o'clock. Exactly at 1 o'clock, we're filling in this 15-minute fair value gap. Okay, so that's why I say that we should consider the intermarket relationship between S&P and Bitcoin. Now, this example and this intermarket relationship goes far and beyond this, but I'll leave it as an example for now. Right, so going back to the afternoon session, we created this new price swing from this high to this swing low, created at 1 o'clock. So what does price do? Because it rebalanced an old range by taking these lows, it moves to target external range liquidity. So let's have a look where this swing high is created and at what time. The swing high is created at 4 o'clock. Now statistically, between the hours of 4 o'clock and 6 o'clock in the afternoon on a Thursday, we have a retracement in price. This is dating back from data from 2011. You can search it up. All right. And this coincides with a pullback on S&P and the indexes and a rally in the dollar. Okay, so we have this pullback in price, targeting another 15-minute fair value gap, at which point we rally, targeting external range liquidity up here. So at this point, I hope I've done a good job of explaining a little bit better the concept of internal and external range liquidity, and I hope people are starting to see the value of these concepts, like the fair value gap. Right, now if anyone is interested, I did create a PDF file document that teaches you how to identify fair value gap, how to trade it, what is the minimum criteria. I explain the dealing range, and I give examples on how to use it, on what time frames are the best to identify it, and I give you my overall thoughts basically my final words about fair value gaps, which are essentially like single prints, or some people teach them as liquidity voids. Okay, but in my experience, Michael Hutchinson's idea of the fair value gap probably does the best, has the most tangible results, and he gives good uh, rules to follow, essentially, right? And those allow you to be consistent. Okay, so like I said, I have that document. It's on my Twitter. You'll find the link to my Twitter in the bio, and it's free to download. No strings attached. I just hope you find some use for it. And if there's anything that you think I can add or you'd like to see changed, definitely let me know, and I will have a look into it. Other than that, I'll leave you guys with the trade I took earlier using the tick charts on Alice. All right. Other than that, I hope everyone has a fantastic weekend, and cheers.
On call, then these new styles came along. Some on to the next, so some other hit their own